Warriors of price action and guardians of fundamentals, welcome to Retail Recon. On today's option series mission, you'll see a complete step-by-step buy right, trade placed live on screen. As you learned in episode 15, this is a covered call strategy. You first buy the shares, then immediately sell the call option against them to collect premium upfront. This episode was recorded live during actual trade placement using EBKR account 1, the same trading account for my monthly reports. I have no affiliation with Interactive Brokers, it's simply the platform that supports my operations effectively. Today you'll watch every click, every decision from stock selection through order confirmation. So gear up and let's execute this mission together. On your screen you see a chart of Petrobras. Why I picked this particular stock? Well, I think it's a perfect way for you as a beginner to get your feet wet when it comes to selling covered calls. It's a relatively cheap stock. For that reason, it doesn't require a lot of capital investment up front. Second one is it kind of fits the narrative where we are slightly bullish to neutral. As you can see, I marked a couple of levels on the chart. Some support, some resistance, and the highest reach price. My hope is that the price stays within the designated levels and it doesn't spike up or down, but it moves horizontally. As usual, when it comes to covered calls, my hope is to get assigned on the call, meaning at expiration the price will be above my strike and the stock will get called away and I will collect the full premium. As you can also see, the price is well below the 22 and 150 EMA. Next, let's move to the broker side and set up this covered call. Or in this particular case, we'll do a buy right, meaning we'll buy the shares first and then sell the call against those shares. As mentioned in one of my first episodes, I will only disclose closed position and not open positions. That's why kind of screened out all of the active trades I have ongoing. I also already have a small position in Petrobras, so with this trade I will just be adding to the existing position. I use Interactive Brokers, no affiliation here, but they are one of the very, very rare brokers who offer trading on US options for European-based clients. Let's now look at the ticker. As you can see, it's currently trading at 15.26 US dollars per share, and we're gonna buy 100 shares and sell a covered call against, 200 shares, considering I already own 100 shares of Petrobras. We can see bid and ask are very closely together, which is something you always want to see, meaning we'll probably get a quick fill and within the designated price. So let's just go ahead and buy the shares. An order ticket opens. We're going to specify how many shares we want and at which price we want to buy them. So type 100 shares. Limit order, of course. We want to fill at or below our price. And we're just going to check the ask. It's 15.27. I'm just going to keep it that way so we ensure a quick fill. I'll maybe go 15.26. Couple of extra options, we're gonna avoid those for now. And do we want to attach some additional orders? No. Click buy. Let's see if we get the fill. A couple of warning notes, nothing unusual here. And waiting for the execution of the order. And we got filled immediately, which is perfect. That's why we love tight spreads when it comes to buying or selling. Okay, next stop, check the positions. We already have credited the shares. You're in account, and the quickest way to come to the options chain is just click on the ticker of the stock. It will take us back to the previous screen, and on your right corner you have an option to go see the option chain. So we click that and this is the option chain. If you have never seen this before, here you have the expiration dates Here you have the strike prices. Here you have the bids and the asks for the calls, of course. The dimmed numbers mean the call is in the money, and the lighter, unmarked numbers mean they are out of the money. Two metrics I usually look at are delta and implied volatility. I paid the most attention to those two. Of course, you can add the other ones if you want them. And on the right side, you have the puts, just to mention. Now let's pick up the expiration date, at which date we want our option to expire. Check out the premiums for those expiration dates. At the moment, we are looking at a couple of options. Okay, we decided we're gonna go with the strike at 15.5. So it's a couple of cents above our purchase price, which means if we get assigned, we're gonna collect on the rise in the stock price as well. So let's check the premiums for different strikes at different dates. March 6th, again, strike 15.5, and we can see the calls are selling for 0.36. Remember, you get paid the bid when you're trying to sell, and you pay the ask when you want to buy. So 0.34 looks pretty decent. And let's go ahead and set up this covered call. So now we need to sell the call, and meaning we are going to receive the bid for our call. So we chose the strike 15.5, expiration date March 6th, and we can see we can get about 0.34 of premium per one contract. Meaning if we sell two contracts, we're gonna be in the ballpark around $70 of received premium. So we're gonna click on the bid because we want to sell the call, and the order ticket opens up. I never used predetermined order tickets because they pay zero attention to the price. We want to type that manually so we get the fill at the price which we want. So we can see pretty decent spread, meaning we're going to have to try and calculate where we are going to get our best fill. So we can see the bid is at 0.34. If we would use 0.34, we would probably get filled immediately. Okay, let's go step by step. We want to sell two contracts. Again, the bid is at 0.34. Let's first try with something in between. So 0.40. Let's start at that. And if we don't get filled in about 5 to 10 minutes, we're gonna lower our bid. As we can see, the order has been submitted, but not yet filled. So let's wait a couple of minutes, see if we get filled. If not, we're gonna slowly lower our limit price for the bid. Here you can see all of your active orders, so you can check or modify them if needed. Okay, our order hasn't been filled yet, so let's adjust it a bit. So we want to sell two calls at strike 15.5, expiration March 6th. Our initial price was 0.40, and let's lower that down closer to the bid. Let's use 0.38. See if that gets us filled. And yes, we got a fill. So we successfully sold two March 6th calls on Petrobras. Since we own 200 shares of Petrobras, this concludes our buy right or covered call setup. And with that, hopefully you've seen how to set up a covered call on some shares you own, or if you don't own them already, how to set up a buy right. And that completes your first cover call mission. Keep in mind, this trade was placed for educational purposes, so you could see the exact process on a real broker platform. Of course, since it was an actual trade with real capital, I absolutely plan to generate profit from it. But the primary objective was your understanding. Now you know exactly how to set up the strategy on your own broker interface. Join me in the next episode for the February Battlefield Report, where we'll debrief how both trading accounts performed through the month. If you found value in this live mission, lock in your support by liking, subscribing, and following our movement. Thanks for standing watch with me today, and until next time, trade smart, risk sharp, and stay on target.